Very good evening, everyone. This is Rajendran here, joining from Market Calls, and welcome everyone to Foundation of Market Profile. So this is a four-part series session that we are doing particularly for the traders who are very new to market profile, and also for the traders who already knows market profile, but they want to have a fresh ideas about market profile. So in today's session, we're going to talk about the very basics of market profile. So I'm sure you guys might be already familiar with market profile. So if you're already using market profile, you just type how many years that you are using. If you're already new to market profile, just simply type if it is new, just simply type new so that I'll get a fair idea how many people are very new to market profile over here. So there is a chat box down there. All right, Ganesh says new, and Malleshwar Rao is saying like he's having a basic idea. Pratap, I think NNV Pratap is saying like he's quite new. And Jignesh is saying he's quite new. Suren is saying like he's 1 year old to market profile. All right, great. And Anup Dikshit is saying like he's using for last 6 months. All right, so in today's agenda, we're going to talk about what is market profile, how to use market profile, what is point of control and value area, and how market profile is different from other indicators, and how to read the market context using market profile, and Nifty and Bank Nifty analysis using market profile. So first of all, let's try to understand why we have to use market profile. Why not some other indicators? First of all, is market profile is an indicator or not? If it is an indicator, is it a leading indicator or lagging indicator? This is the major question majority of the people have. So let me tell you why we should use market profile. And also I'll tell you how I started using market profile and how I am using market profile right now. See, first of all, market profile is more of a graphical tool which shows at a ground level what is happening, what traders as a group they are trying to achieve. Is the traders are doing a good job? Is the traders are doing a bad job? Or what kind of confidence is there in the markets? Is the market is showing very high confidence? Sometimes market might be showing very powerful trading opportunities. So those are the places markets exhibits very high confidence. Sometimes we want to know whether short covering will happen or not. We want to understand the market context. We want to know what intraday traders are trying to do in the markets, what short-term traders are trying to do. Is there is any institutional money is coming and flowing in the markets or not? So now all those questions, market profile will try to answer. Of course, it throws the information in a very visual way. So we trader has to interpret those information manually. We have to interpret. At this point in time, there are no automated tools. Though my intention is to build one, but at this point in time, there are no such automation tools available to tell what is exactly the context. But by using market profile, we can clearly understand how the price action is happening. So more than important, how the price action, along with that, how the price distribution is happening. That market profile will give a very clear idea about that. Now, this information is very useful information from a intraday trader perspective and also very short-term trader perspective. So mostly market profile means usually short-term traders and very short-term traders only, they'll be very familiarly using these tools. And it also helps traders to understand the market sentiment also. For example, last Friday, right, what happened? Maybe I'll show you the market profile charts. Straight away, I'll show you the market profile charts. Market profile is a very good visualization tools, not only to understand the market sentiment, but also to understand what kind of confidence it is shown. So here you are seeing the Nifty futures market profile charts. Now what we are seeing here is last Friday's activity. Every other day we will be getting the market profile structure. So probably if you look through this information, we are seeing the last Friday's price action. This is last Friday's price action. The entire price action is distributed in the form of a profile structure. So this is Friday's price action. And this is Thursday's price action. And probably we have Tuesday and Monday. Of course, Wednesday is a holiday though. So every other day we have a profile structure. So these and every structure, we call this as like a profile structure. Profile structure. So some days you will be seeing this kind of bell curve shaped structure. Some days you'll be seeing a skewed bell curve shaped structure. And some days you'll be seeing a very elongated structure. So you see that the structure is completely elongated. So mostly if you could see that majority of the trending days will have an elongated structure. This is like a clean trend. So last Friday, what happened is a clean trend. Trending structure. So trending structure, you'll be seeing like very elongated structures, very lengthier, elongated. So here also you can see some elongated structures over here. But if you see majority of the structure, you'll be seeing like more bulged activity. So what are those more bulged activities which is happening over here? Why this bell curve shaped structure is happening? Now, if you go back and see in time, you can see that 65% of the time, you're going to see this bulged structures in the markets. And probably this could be like 65 to 70% most of the times. And these kind of elongated structures, the elongated structures over here, it happens in the market typically around 30 to 35% of the time, right? So why this is so important? You may ask why this is so important. Why as a trader, why I should know all these things? So probably anybody who want to learn market profile, the first question they will be having is like, what I'm going to learn from this structure. Will it be helpful in analyzing the markets? Will it be helpful in understanding the support or resistance? The answer is a big no. The answer is a big no. It's not going to help you on a day-to-day trades. But these are like very basic concepts that will help you to understand the markets much better. These are like basic stats, very basic stats of market profile. Everybody knows that, right? So the market doesn't trends very easily. 60% of the time, market doesn't trend. 65% of the time. Only 35% of the time, only the market trends. That's a general knowledge. Everybody knows that. But if you look into the structure internally, let's say if I am taking up this particular structure, last Thursday's structure, I'll tell you how this information could be valuable from an intraday point. So I'm just going to zoom this chart here. Last Friday's structure. Let me zoom it to the extent. Okay. So here is the Thursday structure that we are talking about. This is Thursday structure, right? So if you closely look into the Thursday structure, you can understand one thing, that more time price is spending over here. Okay, how do I know more time is spending over here? So this is where you have to learn how the market profile is getting created. So when I say more time, you see the letters, letter A to letter M is what it is getting generated. Every day you'll be seeing letter A to letter M if it is Indian stock market. The letter A will be starting from 9:15 to 9:45, and letter B will be starting from 9:45 to 10:15, and letter C from 10:15 to 10:45. And this keeps on going on and on till letter M is what we're going to get over here. So only the last letter M, right? It will be running from 15:15 to 15:30, but that's fine. Every other letter will be running for like 30 minutes. Only the last letter will be running for only 15 minutes. So what this letter tracks is, letter tracks the price action. So letter A will be tracking wherever the price is moving up, it keeps printing the letter A. Let's say in the next half an hour, price is coming down. Let's say price is coming down. So it tracks only the price action. We're not bothered about where the price opened, what is the high, what is the low, what is the close, what is the opening of the bar. We're not bothered about that. We just only track what is the range where the price action has been trading and where the price is contributing more time over here. So maybe at some point in time, you'll see like letter C is getting traded over here, is getting more and more bulged. So over a period of time, you'll be seeing like more and more letter D would have been traded over here. Maybe letter E might be coming and trading on the downside. And letter F will be coming and bulged over here. So over a period of time, you would see that more time is getting spent over here. So that is why we call market profile is a very interesting concept which tracks not only the price action, it also tracks the volume in the form of volume profile. So here you can see that there's a volume profile over here. A volume histogram that you are seeing over here, that's nothing but volume distribution. We'll also call it as a volume profile. And then the price distribution is what we call it as a market profile. So typically this is what we call as a market profile over here. So market profile itself, nothing but it tracks the price action, volume distribution, and also with respect to time as well. So since we are talking about distribution, distribution is nothing but price into time is price distribution. Volume into time is nothing but volume distribution. So market profile gives a 360-degree overview of what price, volume, and time is doing. It's giving you in one single picture, right? All right, that's fine. So how I can use this information? So if you are an intraday trader, you know that, right? If the markets are balancing in this range, repeatedly a particular level is getting revisited back in time. So it's price going up, coming back down, again goes up, coming back to the center point. The center point is, to some extent, it is acting like a kind of a magnet over here. And this is a very valuable information, very, very important information also. Because at times, right, these levels could be acting like a potential target for the very next day also. Now, that is what it exactly happened on last Friday. So typically, one of the strategy what we do use is like whenever market is opening with a big gap up. So market open with a big gap up, right? So market profile is one such tool you can use to measure the market confidence. The market confidence is majorly missing in other tools. Let's say I'm having an RSI indicator. Can I able to say, is today's confidence is good or not by you looking into the RSI? No, I cannot able to say that. Can I look into the stochastics and I can say that? Can I look into the Bollinger Band and can I say on a day-to-day basis, on a daily basis, can I able to assess what is the sentiment is going on using Bollinger Band? Of course, no. Bollinger Band, RSI kind of tools, once in a while it gives signals, but not gives signals on a day-to-day basis. Once in a while, you can able to assess the sentiment. Yes, RSI is extremely overbought. RSI is extremely oversold. But what you will say if RSI is around 45? What you will say if the RSI around 50? Or what you will say if the RSI is like around 65? Right? So on a day-to-day basis, every day if you want to assess, we need better tools which tells what exactly right now it is going to happen, or what right now it is happening, or what is likely to happen in the very immediate term. So here you can see that the letter open has been shown as a letter O here. This is last Friday's activity, letter open. So similarly, two profiles you can see side by side. One is the regular profile. This is a regular composite profile, a regular profile. And the next to that is the split profile, split version of it. Split version of the split version of it. Split version of the regular profile. So here is where the price opened. So look where the price opened. Very clearly, I can say that price opened exactly over here. So this is like 2 days back. So 2 days back, this is like Thursday and this is like Tuesday. So price opened exactly. Maybe I'll show how exactly it is. If I draw a line around the 2-day high, I'm just simply drawing a line around that level. You can see that price precisely opened exactly at the 2-day high. Exactly means exactly. So price open around the 2-day high. Usually price take a drive. Price take a heavy drive, right? So price opens, left only 3 letters. 3 letters it left at the open. So means what? Price opened over here, it dropped and it started rallying higher. It rallied to the high. it rallies to the exact highs. Something very interesting happened around that level from the order flow perspective, of course. I also combine at times things with order flow also, but maybe I'm not going to confuse you with the order flow today. As of now, we're going to use only market profile over here. So the price action totally stopped at the high. That's a day high also. Within first half an hour, the day high has been made. If you see at this point in time, price opened, buyer showed clear control at the A period. So price opened with the above the 2-day high, able to push the price action above 2-day high. This is 2-day high here. 2-day high. Price is able to drive up. Now this is high confidence. Buyers are showing high confidence over here. High buyer confidence. High buyer confidence. Right? So buyers are showing clearly strength. If you look only into the price action, you can clearly say anybody who is seeing in the morning, they say like, yes, buyers are driving the market in the first half an hour. But something changed in the second half an hour. So what happened is like the B period broken down. Broken down. See, let me tell you one thing. If it is a high confidence market, right? Price opened above 2-day high. They would have been traded above the 2-day high. They would have done more price action above 2-day high. That is how the market opened with a high confidence. It would have remained like a high confidence. But what changed at B period? If at all the buyers are not serious, you could have been seen like the price will again get back into the 2 days range. So the price opened, it drives up, and the next half an hour straight away it started getting back down. Price enters back into the 2-day range. That's a change in confidence. So actually what happened is like the high confidence over here, it changes back to low confidence. Means initially buyers showed up, but they're not serious. Okay, if at all there is no seriousness, there is a change in confidence. A change in confidence means there is a trading opportunity. Whenever there is a change in confidence, if you notice in market profile terms, that's a trading opportunity. Okay, then where I should trade? What I should look for? Usually I'll be looking for, if at all there is any, yesterday there is a prominent point of control, and if there is a change in confidence, my immediate potential target will be towards the prominent point of control. So when I'm able to recognize my confidence, I'll show you when there is a change in confidence. Maybe I'll go to my Slack community. We'll be using an Slack community. Time to time, I'll be posting something related to market profile or recent market activity, or I'll be sharing my knowledge about market profile, or I'll be writing something about market profile and I'll be sharing along with that, or any interesting happening which is happening related to market participation, I'll be posting in my community here. So last Friday, one of my context is what exactly? Yes, this is what I had posted. Just give me a sec. A lot of things we spoken on last Friday. Yes. So 10-11, around 10-11, I'm seeing that there is a 10-11, there is a enough confidence changes to low confidence. Means today's buyers are not serious. If the buyers are not serious, if there is a change in confidence, any change in confidence is always a trading opportunity, right? Because the market confidence, right, it is not always the same. It will be keep on changing. So probably in a day, at least 1 or 2 times, the confidence will change. Many times it will be changing only once. Very rarely, the opening confidence will remain like an opening confidence. So here I'm able to see that the B price is breaking down. So there is a change in confidence over there. So that means something has been changing, something is not good. So maybe initially whoever thought the market is going to go up, they have to change their expectations in the markets. A very simple logical rule. So naturally the target will be towards the prominent point of control. One of the target is towards the prominent point of control. Of course, the breakdown had led to even more serious thought process. There is one more, another weaker reference was there. So another weaker reference, what I do carry forward is, I do carry forward another weaker reference from here, from this level. This is another target reference, one of the another important target. So I call this as a weaker reference. Maybe in our next series 2, we'll talk a little bit about that. This is a weaker reference. So usually we carry forward this weaker reference up to T+3 trading days. Means if at all any weaker reference which is having, I'll be carrying those information. We call this as a key reference area. It's a weaker reference. Markets do very often come to this level. So usually the very next day we target, but here in this case, it can carry forward up to maximum up to T+3 trading days. So here it is exactly cleared on the T+3 days. So the change in confidence here, at B period, that makes an opportunity to trade towards yesterday's point of control, and not only that, towards the weaker references also. There's a change in confidence. And there are a lot more things we have to carry forward. I'll tell you later on what we should look at that. Before that, we'll get into some of the very basics of market profile here. So basically, the whole idea of what I'm trying to demonstrate here is like what kind of context you can understand from the market profile. So where the traders, they come and trade, market sometimes they do carry a memory. So market profile itself more of a behavioral based trading, where we will give importance to the past data also. But even more than that, we will be giving more priority to what is happening right now in the markets. Yes, past information, we give some weightage, not a complete weightage. Past information, we give only some weightage. But what is happening right now, we will give more weightage to that. Because what is happening right now is more important than what happened in the past. Past, whatever happened, memories will be created in the markets. But what is happening right now is what definitely will give you a trading opportunity, whether to trade towards a target or not, whether the market is creating a resistance or not, whether the market is creating an immediate support or not, is the buyers are doing a good job or not. So last Friday, the buyers haven't done a good job. So that created a trading opportunity to the downside. Now let's try to understand what is the price distribution. Probably by now you have a fair idea what is the price distribution is all about. So price distribution is nothing but a particular price level, how many times it had touched. That's what a distribution is all about. So if I keep looking into a place where maximum number of letters are getting traded over here, I'll be able to spot this location, right? Now in this location, if I count the number of letters, letter A, B, C, D, E, F, G, H, K, L, and M. So almost how many letters? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. Almost 11 letters. 11, right? Yeah, almost 11 letters got traded at the center point. It also created a bell curve shaped structure. That's what market does. Again, majority of the time market does that. It's almost 55% of the time you're going to see this bell curve shaped structure. 55% of the time. And if you could see the edges is having like only one TPO here at the top. And at the bottom also, we'll be having only one TPO also. Majority of the time, 1 or 2 TPOs is what you're going to see. Very rarely, you'll be seeing 3 TPOs or 4 TPOs at the edges. So here you can see like 3 times over here. And again, you can see like 3 times over here. Only at the center, we are having the maximum number of letters. That means what? At the tails, market is spending little time. So less time is spent over here. And more time is spending at the center point. So more time. At times it also results in more volume also. More volume. More time means more business, more buyers and sellers are coming and collaborating. That also results in more volume also. Many at times. Not necessarily on a daily basis, but majority of the location where more time is spending, where price is spending more time, there you'll be spending more volume. Business also happens majority of the time, right? That is what we'll be able to understand from the market profile. And market profile itself uses auction market theory as the base. Auction market theory talks about something called two-way auction process. So in a two-way auction process, what happens? The buyer pushes the price up, seller pushes the price down, and buyer pushes the price up, seller pushes the price down. This will be keep on happening multiple times, right? And that is how the fair distribution happens. Over a period of time, you'll be seeing a fair distribution. Price will be touching a certain level multiple times, and that level will be acting like a kind of a magnet multiple times. All right, let's move a little forward here. So what we can do with market profile, if you ask me, so typically we can use market profile, or typically I use market profile. I'll be mostly looking into two kind of structures. One is macro structure, which is what most of the textbook style, they talk about that. And second one is a micro structures. So micro structures are like tiny informations. A tiny information which could offer a very meaningful information out there, what a particular trader is trying to do. So what intraday trader is trying to do, what short-term traders are trying to do, what powerful short-term traders, we call them as like dominant traders, what they are trying to do. The dominant traders is nothing but the smart money. In a very short term, they will be smart money. See, everybody knows that Warren Buffett is smart money, right? So he is having a very big cash pile. So he is considered as a smart money. And our late Rakesh Jhunjhunwala is considered as a smart money. Ramesh Damani is considered as a smart money. Why? Because whatever they had invested, majority of them had given great returns. But the real question is how I can identify smart money today from an intraday perspective. Because I want to take a trade today. Maybe if Rakesh Jhunjhunwala or the Ramesh Damani or Warren Buffett is buying, he may be right in the next 5 years or maybe next 6 months. Not necessarily he have to be right the very next 1 hour. Not necessarily he have to be right for the next next 2 days, right? So the real goal is like, if I'm an intraday trader, I need to figure out a smart money, what smart money is doing from an intraday perspective. I don't need to track what FIDIs are doing, because FIDIs are doing something on a daily basis. Daily basis, FIs and DIs might be buying some thousands of crores. They might be buying, they might be selling. But at a very core level, from an intraday traders, what they are trying to do. Short-term traders, what they are trying to do. So where the intraday smart money is coming, where the short-term smart money is coming. So how I can make use of those information. That is what the microstructures is all about. The microstructures talks about not only about the smart money, what smart money is doing, it also talks about what the dumb money is also doing. And I would tell you, market profile is the only tool which will help you to identify smart money also. It will help you to identify the dumb money also. That's why I see this market profile as a very powerful tool. That is why it is one of my core arsenal since 2012 onwards. I've been learning market profile since 2012 onwards. It's been more than a decade now. I can still say the same thing, that market profile is a very powerful tool to analyze the behavior of the traders. Not only to analyze only the behavior, but also take advantage of those behavior. Because these behaviors are very repetitive behaviors on a day-to-day basis. So from the macro structures, I'll be able to analyze the profile structures, the double distribution, triple distribution, probably the normal day, spikes, P-shaped profile, B-shaped profile, those kind of structures you would have already heard or seen or listened anywhere else. That's almost there. And we also focus on the short-term references. Probably from a positional point of view or from an intraday point of view, these short-term references or key reference levels are very helpful in identifying resistances, support zones, sometimes even targets, sometimes major support zones, sometimes temporary support zones. So those kind of things we'll be able to understand from the short-term references. But micro references, this is the one which is not spoken anywhere in the textbooks. It's not spoken anywhere in the, or not much. It has been spoken in the YouTube channels or everywhere. These microstructures are very useful references from an intraday perspective also, very, very short-term perspective also. Sometimes you'll be able to spot smart money. As I said, you'll be able to use to spot the smart money and dumb money using those microstructures. So we call them as a visual reference level. Markets do visual things most of the times. So probably one example I'll show you. Suddenly speaking, I'm having only one example only, it's coming to my mind. So if you could see the structure of Bank Nifty here, this is Bank Nifty profile structure. So what really happened over here is, if I could zoom this, you can find something very interesting on 2nd of May. 2nd of May high, I'll draw a line over here. So this is a reference, I'm just still drawing. Now, from this reference, what I can understand here is the high which happened at letter B and the high which happened from 29th April, it's just only one TPO difference. It's just only one TPO difference over here. Now, what does that mean? Now, what does that mean is like when the price is moving towards the high, now some people are voluntarily, they are stopping the price action over here. They are just exactly coming and resisting around the one of the day high, 29th April high. Now, you may think, if you're a first timer, you may think it is fluke. Very luckily, it would have happened. But what if you do see this kind of information on a daily basis? This kind of visual reference. This is what we call as a visual reference level. And this is how traders, they take trading decisions. Now, I'm not talking about traders like you and me. The traders who have the muscle power to stop the markets, who can bring bigger price action, who have a very big muscle money power to move the price action here. That kind of trader is what I'm talking about. That we call them as like dominant traders. They are smart traders most of the times, dominant traders. Very few places they do take dumb decision also, but they are smart traders 75% of the time. So we have to learn to track what these smart traders are trying to do in the markets, because that is going to impact my today's trading decision. If what these dominant traders are doing, if I know that these guys are selling exactly, maybe I can take advantage of that. I can go along with them in that same direction. But only thing is like, I need to know that clearly, yes, I'm dealing with the short-term dominant traders. That's what I'm talking about that. So these guys are not Warren Buffett, right? But they are right in that particular day. So tracking dominant traders is very, very important from an intraday perspective. And many at times will be important from a very short-term perspective also. So that is what the visual reference level is all about, which talks about what dumb money is doing and what smart money, the dominant traders are trying to do in the markets. Of course, we know that market profile is made up of letters. Some tools they show in the form of blocks. So we call each and every letter as TPO. TPO means time, price, opportunity. T is time, P is price, and O is opportunity, means volume. That's what it is indirectly mentioned as opportunity. So every 30 minutes, a new letter is generated, and we'll be compressing the letter towards the left. So that end of the day, what we will getting is a profile distribution. Now, many people's question is like, can I look only into the profile structure? Can I look only into this profile structure? End of the day, I'll be opening my charts. I'll be looking into this profile structure. Can I make a trading decision tomorrow? Not every time, right? So not every time, because not every time the opportunity comes at the opening itself. Sometimes the opportunity might come at the open. Sometimes the opportunity may come at 10:30. So like last Friday, the opportunity, the real opportunity itself, we have been able to understand only around 10 or 10 o'clock is where the real opportunity we are able to understand, because that is where we are finding the change in context, change in confidence. We are able to understand that. By studying the profile structure, you will get a basic idea. Probably it's like reading the ABCDs of the markets, ABCD of market profile. The ABCD of market profile is nothing but trying to understand the market structure. That's a very basic thing. If you ask me, can I look into the structure alone? Can I say where the market can go next? Of course not. Right? The structures are the past. But real-time structures is what it is more important. Real-time market confidence is what it is more important. For example, I showed you that around 10:10, I was assessing the market confidence. Market confidence was changing. There's a change in confidence from high confidence to low confidence. That is a real-time information, real-time interpretation. That is what it helps you to take trading decision most of the time. But can I use it positionally? Yes. Some cases you can use positionally also. For example, if you take Bank Nifty, if you take the Bank Nifty price action, so if you could see the Bank Nifty price action, so 30th April. So 30th April, clearly we are having a clean, something called excess. An excess will be looking something like this. Excess is, the price is forming a pattern called excess. The structure, this is a macro structure. At a macro structure level, I'm talking about here. So price clearly goes up and clearly comes down. So it becomes like a clean excess. It left a strong tail. It left a very strong tail. So typically I would say, like, if you ask me to draw a zone where it is an area of importance, this zone is a very powerful zone. So it created a lot of single prints back then. So a lot of single prints it had created at K period and also like L period. Sorry, J period and K period. This is a very powerful zone over here. So is it a market top? If you ask me, yes, it is a market top. So maybe I'll show you what kind of argument we had that on that particular day. So end of the day only, we are very clear that yes, market is making some sort of a top pattern. So probably I'll go to the 30th. This is May 1st. If you look into the May 30th over here, so clear excess on daily time frame and also from market profile in Bank Nifty, right? So there is a clear excess on the daily time frame in Bank Nifty. So Bank Nifty also had a reasonable strong midday pullback low with a serious excess. This could be a possible short-term weakness, right? That's a very important argument that we are seeing from the profile structure. When we are seeing this information, very near to the end of the markets. So around the 254, where the day is about to close. So 254 is what we are incurring. And probably we are also once again confirming that around the 325, yes, there is a clear excess on the daily time frame and also from the market profile perspective. In fact, I also shared, end of the day, I also shared about this information as well. So is Nifty and Bank Nifty May futures, is it forming a short-term information? This blog is available in the market call section. So you can go and read about it. So this excess is a macro structure, right? This is a powerful information from a short-term perspective. So some informations are gives us the meaningful context from a short-term perspective. Some informations are helpful from an intraday perspective. Some information talks about smart money. Some information talks about dumb money. I don't see any other tool which had done this amount of information. Now, another information which I track is the VSA. VSA, I would say, like, I'm not an expert in VSA. I do have some decent knowledge about VSA. I'm still learning. But VSA also, we can do a bar by bar interpretation. But more than VSA, market profile gives the amount of information market gives on a daily basis is enormous, more than it reveals any other indicators says about the market sentiment. Many other indicators, they'll be showing in numbers. Right here, we can visually see those information and we can, in real time, we'll be able to diagnose the markets and we'll be able to come up with a best trading solution for that. So that is with excess. So what is excess? Excess is end of one auction and beginning of another auction. So if you see the very basics of market profile, so let me go through the basics of market profile again. So we learned that what we can do with market profile. I showed you a couple of basic idea about what market profile is capable of. So here are some of the market profile terminologies: initial balance, value area, point of control, buying tail, selling tail, and single prints, halfback. A lot of terminologies, right? So basically, if it's a simple candle, we have only open, high, low, close. But here we have learned basic terminologies itself. There are a lot of terminologies are there, but these are like very basic terminologies only, easy to learn. So the tail section at the top, you can see that a lot of single letters we are having. This is what we call as a selling tail. And at the bottom, we are having a buying tail over here. So bottom is the buying tail. All are single prints. Single letters. Horizontally, if I measure, I'm seeing only single letters. So if I measure over here, I'm seeing three letters, A, D, and E is there. If I measure over here, I'm having only one single letter over here. So the letters at the extreme is what we call as a tails. So here we are seeing a buying tail and selling tail. The center point where more traders, buyers, and sellers are colliding against each other. This is what we call as a kind of a magnet kind of zone. We call it as a point of control. And surrounding the point of control, we'll take 70% of the TPOs. 70% of the TPOs. Let's say there are 100% of the TPOs are there. Among the 100%, where the 70% of the TPOs are trading with respect to the point of control, that zone is what we call as a value area. So typically, many tools will be plotting a lines like this. In my tool, it will be plotted like a bracket. So this is a 70% bracket. The top of the bracket is what we call as a value area high, and the bottom period is what we call as a value area low over here, right? So what this value area high and value area low says is like where the 70% of the activity is getting crowded. And this is an important zone. Why it is important? It is important because this is the area where more transaction happens, more business happens, and more institutions like to trade. More institutions like to accumulate, more institutions like to distribute. Because of this reason only, institutions do come and trade. This is one of the reasons why 70% of the time we see a sideways market. Why we are seeing a 70% of the time we are seeing a sideways market? Because accumulation distributions are part of the game. Almost every day, the big business players like FIs and DIs have to do some business, right? Somewhere they have to, they'll be keep on getting a lot of money inflow. Or sometimes if the situation, market situation is not good, they'll be getting a lot of redeeming pressure. So always they're doing some transaction. You can always see like I mean, today FIs had bought so-and-so crore. FIs had sold so-and-so crores. So this is the net activity of the buyers. This is the net activity of the DIs. We'll be seeing, right? So all these money, to pump all those huge money, they need a fair auction. They need a fair auction where more transaction they'll be able to do at a particular point. And that point is nothing but the point of control. And that happens 65% of the time. So 65 to 70% of the time, you're going to see this point of control on a daily basis. Every other day, we're going to get a point of control. Maybe in the trending days, point of control doesn't have much of a significance because that is a pure directional play, because not every day the FIs and DIs will be controlling the markets. Of course, if they want to take control, they can take control, but they will not do it on a daily basis. Maybe out of 10 days, maybe 2 days or 3 days, they might try to attempt to control. Or maybe out of 10 weeks, 1 or 2 weeks, they may attempt to control. The rest of the time, the market is controlled by the short-term dominant traders most of the time. That visually you can see it from the market profile, right? Okay, let's move a little forward. And then there is another terminology called initial balance. It's a very old terminology. There's a terminology which is used in back in 1980s, 1990s, where we had a flow trading. So it's more of a very old flow trading concept. There are some strategies also around the initial balance. But modern days, I prefer to stay away from initial balance. Very few places we use initial balance. It's not like I'll not watch initial balance. Very few places I'll be watching initial balance, particularly to identify breakout failures. IB breakout failure. It's called initial balance breakout failure. That's the only strategy I'll be looking into that. Otherwise, I have a general idea where the initial balance is. I don't try to dissect too much about initial balance because I am very well known about that. It's a very old, generation old concept. It is. So usually it's a very old concept. Why I'm saying is like back in those flow trading days, first 1 hour, if you go back and observe in time, let's say I'm giving you a time machine, you're going straight away to the flow trading activity and you are observing. First 1 hour, you can clearly see that only intraday traders are trying to dominate in the markets. Of course, this has been already written in books also. The people who already went through the floor, like people like Peter Steidlmayer, who invented market profile, and Jim Dalton, who took market profile to the next level. So they had clearly confirmed that the first 1 hour, when the market is about to open, the intraday traders are the one who is very anxious to trade. So probably in Saturday, Sunday also, right? People will be having a lot of dull boringness from the trading point of view. So they'll be waiting for markets to open. They want to get into that fist fight. They want to get into that first trade. They want to make that first trade. That's how the anxious the traders are. So first 1 hour, it has been clearly back in uh, the flow trading era. First 1 hour is mostly dominated by the intraday players. That's why they first 1 hour is mostly the range created by the intraday traders is what called as a open range high and open range low, ORB high, ORB low. That those kind of concepts are there. Some people take first 15 minutes, some people take first 1 hour. So all those things came from the flow trading concepts only. But now we are living in an electronic era. Anybody can jump into the markets at the open. Anybody can trade at any point in time, right? So that thing has been gone. Earlier, it's a clean slate that mostly 80% of the time, the intraday traders are the one who opens the market. Maybe now also it could be true because traders are always anxious to trade at the open. Within the market opens, within 5-10 minutes, they always try to find a trade very quickly. Very few traders, they have the patience to wait for an opportunity till 10 or 10:30, or sometimes they want to wait till 12 o'clock. Sometimes you may have to wait till 2:30. Sometimes you may not get an opportunity at all. But frankly speaking, how many of us we had waited for a trade? Somehow we'll be trying to find a trade. Oh, Nifty opportunity is not there. Let me go to Bank Nifty and let me check. Oh, Bank Nifty is also not there. So I'll go to Reliance and then let me go and check. Somehow we are very curious to find opportunity at the open. Right? So what is exactly point of control? So point of control is the price level where more trading volume happens. Not only trading volume, more trading price action happens around that level. Multiple times a price level will be revisited from an intraday perspective. Typically speaking, at least 7 to 8 times, bar minimum, a particular price level will be touched. This happens 70 to 80% of the time. A particular level will be touched at least 7 to 8 times. Bar minimum. So tracking the point of control for the day, today where the point of control is going to form, that is very, very important. It is important from a price action perspective. It is important from an intraday trading perspective, where today's point of control is going to form. Today's point of control is what we call as a developing point of control. So today's point of control, so how do you call this? We call this as a developing point of control. And almost on a daily basis, we're going to see the formation of a point of control over here. So what is value area? As I said, value area is nothing but where 70% of the total TPOs are getting traded. It is measured with respect to the point of control. Where the point of control is, with respect to that, the value area will be computed. So let's try to understand the difference between fair price versus unfair price. So usually we'll say the point of control. So the point of, let me take a simple example here. So here is the example that we are having. Now, if you see this example, Now, one thing is very clear. The center point is where we get a more price action over here, right? The center point is where we're getting the more price action. If you closely understand this price action, maybe I'll try to, yeah. So the place what I had marked over here, that is the point of control. This level is considered as a fair price. Why it is considered as a fair price? Because this is where more institutions like to trade. More institutions, they like to trade around the fair price. At the edges, they don't get little, they get very little business. That is why not much of a transactions are happening at the edges. And those levels are called as an unfair high and unfair low. Unfair high and unfair low. So think about this example here. Let's say I always quote this tomato example. Even when I am returning back home couple of days back, I was seeing that 5 kg tomato is like 20 rupees. That's what right now, 2 days back, I was seeing in my near to my building. So why I'm talking about this is like last summer. I mean, maybe not last summer exactly, probably around last August, September, back around that time. 1 kg of onion was like 150, 140 rupees. And 1 kg of tomato was like around 120, 140 rupees. Both the price of onion and tomato was like very costlier. We know that, right? Everybody knows that it's an unfair price. Always it mean reverts. It reverted back in history. Sometimes seasonally, it suddenly because of that sudden demand of tomato and onions, seasonally it tend to go up. But will it sustain? It will not sustain. Probably it may be there. The news channels will be talking about that. They'll be saying like, hey, the government is doing bad job. Because of that, only onion price is rising. A lot of dirty politics is done on top of the tomatoes and onions. Almost every government had done that, right? Every opponent government and every government had done that in the past. But I'm not going to go deeper into the politics here. The context here is the unfair price, whatever it happened, it never lasted for a longer period historically. We never seen like 140 rupees tomato or 140 rupees per kg of onion. It never lasted for like almost 6 months or 1 year. Probably 1 or 2 months, and then it will be started slowing down to 75. Suddenly you'll be seeing like around 50. Suddenly you'll be seeing like around 30. Now today, as I said, last 2 days back, I was seeing like there was a board saying like 5 kg of onion, 5 kg of tomato for 20 rupees in Bangalore. So right now we are at unfair price zone. So back then, 3 months back, it was like around 40, 45 was the price. But majority of the time, we'll be able to see that the fair prices will be around 40 to 45. Sometimes because of more supply, we will be getting a very at cheaper prices. Like the price will be going like 20 rupees. I even seen like a couple of years back around 20 rupees per kg. So both unfair price at both the extremes, the 20 rupees of tomato per kg and 140 rupees of tomato per kg are unsustainable. Usually it will mean revert back to the mean, to the center point. And more or less market also like to do the same thing over here. Whenever there is a value investing opportunity, think about that during COVID season, March 2020, when everybody went through a phase of lockdown, market had given a very deep discount. Very, very deep discount. Market usually will not give such kind of a deep discounts. It given a very clear value investment opportunity. But how many years it sustained in that level? Very few places. Hardly, probably around May, March month we had bottomed out. Same year we had seen an all-time high. Same year. Same year we had seen an fresh multi-year low also. Same year we had seen an all-time high also after that. So if at all there is any unfair advantage in the markets, it will not be last for a longer period. Let it be any innovative trading strategy, or let it be any modern mechanism is available, it will not be there for a longer period. Even the trading opportunity also includes trading opportunity also. If there is any best of the best opportunity, that will not last for a longer period. Yes, maybe it may be there from an investment angle, but from a trading angle, the investment, the trading opportunity will not be there for a very longer period. So here we are talking about something called initiative auction and responsive auction. An initiative auction will be something like this. When the price is moving away from the, let's say this is my 40 rupees of price action. This is like 40 rupees. Usually price will be trading around the fair price level most of the times. Right? So this is a fair price of tomato. But when from the fair price, if it is deviating away from the fair price action, this is initiative auction. Initiative auction is like price is pushed outside the value area, pushed outside the point of control. That is how the initiative auction is all about. So we can call this as like initiative auction up. An initiative auction can happen on the downside also. It's more of a trending price action. An initiative auction down also can happen like this. We are having an point of control, which is like 40, which is a fair point. Price is trading around that back and forth. When the price shoots away from the point of control, away from the value area, then we will call this auction as an initiative auction. This is like simple trending upside auction. This is a simple trending downside auction. So from 40 rupees, it is going to like 140. From 40 to 140, it's a trending price action. Likewise, from 40 to 20, again, it is trending downside price action. That's a clear trending price action. That is what an initial auction is all about. Okay, then what about responsive price action? Responsive price action also, it's something similar to that, but it is counter trend reversal. So let's say I know that the fair price action is 40 rupees. Right now, the price went to 140. So from 140, again, it is falling back to the 40 levels. So I know that this is my point of control. This is going to be my point of control. This is going to be my fair price. So from the unfair price shifting back to the fair price zone where it is supposed to spend more time. And that is what we call it as a responsive auction. It's a counter trend reversal, mostly a V-shaped reversal where price is pushed back into the value area, back towards the point of control. Such kind of auction we call it as a responsive auction, right? And not only that, even if the price is from 40 levels, it dropped down to 20, and from 20 again, it is pushing back to the 40 levels. This V-shaped reversal is again, it's called as a responsive auction. So where we know that it's a value area. So this is a fair price. So price is pushed outside from the value area, back into the value area, back towards the point of control, back towards the fair price. And that auction is called as a responsive auction. Very interesting one, very powerful one also. Many a times it is very important. So let's move a little forward. So here I'm showing a regular normal profile on the left-hand side. The same version of split profile is what I'm showing over here. So what I can also do here is to my charting tool, I can go back and I can split any day and I can see the split version of that. Sometimes if I want to see the intraday price action, I'll be seeing the intraday price action by looking into this. So this will clearly show me how the intraday price action happened. So this is like every half an hour once only we're going to see this. So price opened, letter A and letter B went up, B period topped out, and then it came down, C period crashed down, D period went down, and E period and F period broken clearly on the down. And later on, we had seen like more and more price rotation is what we had seen. So split profile, mostly helpful from an intraday perspective, right? So if I want to analyze any intraday nuances or intraday, any visual reference levels are there, at times I'll be trying to split the structure and then I'll be checking, is there any intraday visual reference levels are there or not. So split profile is very, very important. Split version, even it is important, even if you're an intraday trader also, it is important. Even if you are a positional trader also, it is important. So here is the comparison of how the 30-minute chart versus market profile chart looks like. So what you can see here is like if you simply replace this candles with letters, that is what will be becoming like a split profile. So here is the candles. I simply replace the candles over here with letters, right? So the only thing is like you will not get to see the open, high, low, close. Anytime if you want, you can open the candlestick charts and you can check it out. Maybe if you're a beginner, it's okay that you always compare candlestick charts with the market profile. But once you're getting more and more proficient, maybe the use of candlestick will slowly start disappearing and you'll be start looking into mostly from the profile perspective. Whenever if you're having any doubt what the price action is doing, you can always open the candle and check. But at some point in time, you will stop using the candlestick charts. It's not like I'll be completely staying away from candlestick charts. Once in a while, I'll also look into the candlestick charts. But majority of the time, particularly during the live markets, my focus will be mostly on the profile structure. All right. So here comes the normal distribution. I'm sure you would have studied this normal distribution in your high school mathematics. Let me try to reiterate here. This normal distribution, what it says is like the center point over here. This is what we call as a mean. The center point here, we call it as a mean. The center is always 0. That's the mean part. And we also have a plus or minus 1 standard deviation over here. This is what we call as a mu minus sigma and mu plus sigma. Probably you would have studied in high school mathematics. Maybe you might even studied in accounts. If you are not a Stein student, you would have studied in accounts also. Because this principle is a universal principle. Market profile is also built on top of this principle. So we'll be using a central limit theorem, which uses probability as the basics. So here, what is said is like this minus 1 sigma to plus 1 sigma. This zone, if you cover, this entire area covers 68.2%. It's also called as a bell curve. Even many people, they get their salary increment based upon this bell curve structure only, right? So almost this is used in almost in every industry, including market profile. So this plus or minus 1 standard deviation is what 68.2%. So here instead we replace the center point as the point of control, POC. And instead of taking 68.2, we take a rough estimate of 70%. That's what the value area is all about. This value area itself nothing but what? 70, where the 70% of the trading activity or where the 70% of the trading volume is happening. So we take the 1 standard deviation part. That's a math which is behind the market profile, right? Otherwise, market profile is not a mathematical tool, even though the underlying there is some normal distribution kind of mathematics is used. Market profile is more of an art rather than a science. Means to understand the market context, you need a repeated practice. So that's what I said. Like, so let's say if you want to go to gym and you want to build a body, you have to show up on the gym on a daily basis. That is where you can become a bodybuilder. It's not like you just show up. You just show up and then you do the workout, regular diet, and then you can shape your. You'll be able to shape up your body, or you'll be able to shed up your whatever the weight that you had gained. Same thing applies to the market profile also. Just because you are reading market profile, that is not going to help you out. So what is very much required is the regular, repeated practice. That is what it makes you over a period of time, probably 1 month or 2 months of time, your trading decisions from here, from the past, your trading decisions will be getting completely in a better way. That's how the market profile is. It's mostly for the people who want to learn a skill over a period of time. It's not something that you can learn overnight because a lot of nuances you may have to learn. All these are simple nuances only. A lot of structures you may have to learn. Some few rules you have to understand. Repeatedly you have to learn. So continuous learning is what it is important over here that will help you to trade in any kind of market situations. Let it be a highly volatile market, let it be a low volatile market, let it be Nifty, let it be Bank Nifty, let it be stocks, commodities, gold, currencies, or even cryptos. So let it be any kind of market situation. If you want to train yourself, first you have to train yourself to adapt to any situations. And you apply the market profile skills or basically the framework that whatever that you had designed. from that way, the trading decisions, it will be reflecting in your P&L statement. All right. So here is the NinjaTrader 8 TPO settings. So typically these are the software settings. I'll be keep doing it in my tool. I'll be using optimal TPOs. So we have to set the TPO size basically. This TPO size I'll be setting based upon different trading instrument. I'll be using a different TPO settings. So for something like Nifty, since Nifty is around a 10,000 to 25,000 zone, I'll be using 2-point TPO. Means each and every letter is like 2 TPOs, 2 points. Whereas for Bank Nifty, it is like 5 points. Something like Reliance, it will be like 50 paise. Every letter will be like 50 paise odds. So the TPO settings are very much important. And it is very granular also. It is optimal also. Right? So the tools like NinjaTrader, you'll be able to easily set such as small TPOs. We call this as micro TPOs. This micro TPO concept is very powerful and very important. Because of that only we'll be able to spot the visual reference level. If you keep from random TPOs or some other TPOs, you may not be able to capture the exactness. You'll not be able to capture the smart money. It will be very difficult to capture it. Maybe sometimes it may be non-smart money. It will show that as a smart money. So that's not a good deal. So trying to use an optimal TPO all the time is a very important thing. Now this is a template I'm following in all my studies. This template I've been following for more than 5-6 years. I've been following this. So far there's not change. There's no much of a change in that context. I think I've been using since 2016-17 onwards. I've been following this template. All right. So I think that's the basics about today's market profile thing. Last but not least, about the Nifty activity. Let me show what I am seeing right now. So talking about Nifty here, right? So what I had seen is like there are 2 things I'm seeing from market profile and 1 I'm also seeing from VSA. I'm going to talk about those things as well. So what I am seeing from market profile is though there has been a crazy breakdown happened last Friday, price manages to close above the 3-day low. This is like 3-4-day low here. A crazy liquidation. We had a 4-day low. We had a clean 4-day low. The 4-day low got broken down and it translated into, it manages to close above the 4-day low. This is what I call this as a liquidation breakout failure. It's called as a liquidation breakout failure. Very rarely it happens, but this time it happened after a very long period. Recently, we haven't seen this kind of structure at all, but we had crazy sell-off, but despite the crazy sell-off, price manages to close above the 4-day low. So how to approach this? Does this mean anything? Immediately, it doesn't mean anything at all. But from Monday, we have to pay very closer attention. If at all Monday, right? So there are positive side to think. There is also a negative side to think as well. If in case, if the sell-off is not serious, as of now, it is tough for me to assess whether it is serious or not. But if it is going to be serious, we will be seeing that the price action will be mostly having a strong resistance around the single print zone. There's a strong single print zone around there. So in between the profile, we are seeing a single print zone. That's going to act like a kind of a resistance either way. And if we are seeing that coming Monday, that is tomorrow, if at all the price action is going to break down, that is going to trigger more positional shorting opportunity. Maybe that could be a little dangerous for the series also. Maybe it may not be at a major top as such. So far, I'm thinking that whatever the correction it happened is a temporary correction only, no matter what. Nothing to correlate with elections. Of course, election is there. Elections are happening. So volatility is going to rise. Volatility is one side, it is rising. But it is seasonally, if you speak election around the election season, normally the volatility tend to rise. I don't know, this time volatility is rising and it is immediately falling. Again, it is rising and immediately falling. But this time again, volatility is rising. So uh, irrespective of the market situation, whether volatility is rising or falling, whether election is going to happen or not. So how we can prepare ourselves for the trading opportunity? One is like the single print zone. As I said, this could be the major area of importance. Anything above that, maybe it could trigger a major positional long opportunity. Maybe my expectation will be like at least 600 points. If that is going to happen, I'm not saying like that will happen. Please very clear about that. I'm not saying that will happen. But if at all the price is able to spend more time above that level, if at all the value area is able to build above that level, that will be considered as a bullish situation. But is that bullishness is likely to happen? If you ask me, I don't know. Frankly speaking, I don't know. But if at all the low, the immediate low, if it is going to take down, then that will create more positional selling pressure in a very short term. In this month, I'm talking about this particular month of May series, I'm talking about that. Maybe in fact, there could be an possible odds of like maybe another minus 600 points we can expect on the downside from a very short term point of view. I'm talking about from the May series angle. So usually I'll not go for such a bigger, larger opportunities, but whatever the price action happened, definitely it had done the disturbance. So when we can expect minimum bullishness on Monday? So here is the first single print zone that we are seeing. If at all we are able to see a price action above this level, and yes, of course, we're going to see the another level of resistance that also has to surpass. But that is the first positive clue that this liquidation breakout failure is true and it is working out. So the sellers are not serious. Last Friday, sellers showed up. Maybe they are not serious, at least not yet. But if they are serious, very first clue that you'll be seeing is like maybe the breakdown. See, a breakdown and price can still pull back. But this area of zone will be acting like a more potential short-term resistance. Maybe over a period of time, we'll be seeing more and more selling pressure, very slow and steady selling pressure, because market never moves in a straight line all the time, right? Sometimes if there is a scam, yes, market moves in a very straight line, straight crash. But I don't see any global happening at this point in time. I don't see any local happening at this point in time. I don't see any drastic fundamental change that like what we witnessed back in the COVID season, something like that. I haven't seen anything which is happening at this point in time. Yes, we had some time back, we had the Israel-Iran war tension, but nowadays I'm not hearing any news or any buzz around that, what is happening in Iran and Israel. Maybe that there might be something might be happening at the ground level, but at a surface level, I'm not still seeing anything at this point in time. So I think I believe it is going to be a trading markets more than an investor markets. So maybe investors have to wait a little patiently until then, right? So maybe investors might have an opportunity also to get into the long side, but more than an investment market, it's going to be a trading markets. So one step at a time is what usually works around these kind of levels. All right, let me take a couple of questions here. There are some questions in the chat box. Just give me a sec. So if you have any questions, you can just type in the chat box or in the Q&A section. All right, there is one question from Mr. Vineet. His question is market profile is a leading indicator or a lagging indicator? So this is the same question I'll be getting in most of my market profile session also, in order flow session also. So market profile and order flow, as I said, it's more of a tool. You can study what happened in the past, but it is a tool of more of a present. It's a tool what is happening right now in the markets. As I said, we will be giving too much importance to what is happening right now. At the same time, to some extent, we'll also give importance to what happened in the past, because market profile is all about studying the visual reference level, the memories which created in the past. So those are the potential targets sometimes. Those are the potential immediate support zones sometimes. Those are the potential resistance many at times. So definitely that information will be helping us. But more than that, we will be combining our real-time knowledge of the market confidence, how to measure the market confidence, what kind of intraday opportunities are throwing, whether it's a smart money, dumb money, where the point of control is forming, where the value area is forming for the day, right? All those things are like more of a real-time study. That is where the real-time decision do happen. And there is also another question from Sudarshan. His question is like, will the recording will be shared for these sessions? See, all our sessions are getting recorded. All our sessions recording will be automatically available in our platform. End of the day, same day, you'll be able to access the recordings as well. So Mihir is asking, can you please explain ABCD extension failure and accept? I don't have a concept of ABCD extension failure and accept. See, in the markets, right, many people are teaching market profile. They have a wide variety of experience. So some people are deriving their own from their own experience, right? So not everybody is like textbook style. Many people, they try to derive from their own experience. For example, I've been seeing market profile for the last 12 plus years now. So more than a textbook style, I have my own style of patterns. So far we had classified like 25 top setup and bottom setup, how a market profile could top out, how a market profile structure will look like when it is bottoming out. I have my own style of intraday framework. So if this happens, then it should be an intraday opportunity. Probably the prominent point of control will be the target. Probably the weaker levels could be the target. If that is happening, maybe if certain other situations are happening, maybe that could be a temporary resistance. So I classified which is stronger resistance, which is weaker resistance. I classified which is a fast target, which could be a slow target. I classified which target will happen within next 2 days, which target will happen in next 3 days, or which target can happen immediately. So those kind of targets I had classified in the last 12 years over a period of time. It doesn't happen overnight, but slowly, as we start seeing market profile repeatedly, we keep learning market profile. Very slowly, we're able to understand the context over here. Right. So, frankly speaking, the ABCD extension failure, I don't even know what exactly that is all about. Maybe if you're talking about failed auction, it's something a bit different. So maybe if you're talking about breakout failure, yes, I know about that. Yes, there is one question from Mr. Nilesh. So Nilesh, yes, Nilesh, please go on. I mean, it's not Nilesh, it's Nitish. Yes, Nitish, please go and ask your question.
So that can I look at power grid chart? So there are a lot of sort of references playing how we can derive context from there, sir.
The one challenge I'm facing over here since the morning, right? There has been like continuously, there has been a fluctuation in the data feed. Let me try it out. So we're talking about which chart?
Power grid.
Power grid once again. So let me duplicate this. Just give me a sec. I'm not very sure whether the data will get loaded or not. I think I have to connect the data feed also. Temporarily, I had disconnected the data feed because there are a lot of fluctuations, connecting, disconnecting. Usually, the data vendors will be going for a maintenance. So I had disconnected the feed here. Let's see if it works. It works. Well, still trying to load here. It says loading. Let's see. So in the meantime, whenever we are looking into any symbol, we have to do the top-down analysis. So here I'm going to use TradingView to do that, right? So it's a sin always straight away getting into the market profile. So before getting into the market profile, you have to learn to do the top-down analysis. So top-down analysis is like kind of a casual overview, what is happening at a different level of trend, where we've been standing from a trending perspective. So I'll be mostly looking into the monthly trend first. Let me close the other context here. Let me pull up Power Grid. So here we have the power grid. So it is at all-time high, right? So monthly it is at all-time high. You can see this pattern that it is keep on one time framing. So it's been one time framing. It's a kind of an control that this entire stock is in the control of investors. Monthly, it's at all-time high. Weekly is at all-time high. Clean trends are there. It's also one time framing higher. And daily, if you could see that, even daily is also keep going higher. But we have to pay very close attention over here. So sometimes I'll also use something like VSA kind of tools. So if you could see the VSA tools in Nifty, there has been a short signal got generated. So maybe there is an upthrust bar is there and there's also a 2-bar reversal volume. Nitesh, if you understand that it's kind of a top formation. So last time we had similar bottom formation over here, right? So
Yes.
similar top formation is there, very powerful one. So that's why if at all any follow through is also happening positionally, this could lead to a major decline if at all if it's going to happen. If it is not happening, it's well and good. Maybe we may even able to see some very good long opportunities also. But this information at this point of time, looking into that, it is not looking good. Maybe if the price is breaking down and we are able to sustain down below 22,499 or 22,500 kind of levels, this is not looking good. Same thing will go with the power grid also. Let's see if at all there is any bearish signals, if it is there. That's also part of the top-down analysis. So this is power grid over here. We had some minor bearish signal,
There
not a
is a
major one.
high at top, sir, and P shape is also there, and open is equal to low is also there, and R peacock is also there.
Yeah, I'm just looking at that. So now I'm going to look through the market profile. So the trend is clearly on the higher side. First thing I'm going to check here is what is happening over here. So we are seeing like an open equal to low, and then is the high is visual.
Somewhere.
Is it visual?
Yes, sir.
Okay, then that means some sort of dominant selling is there, right? So some temporary selling is there. Maybe, uh, yes, the inventory is getting long to too long here. So probably the first target we can anticipate is like towards the open equal to low kind of levels. So it's kind of an overheated level. Maybe this kind of setup will invite some temporary selling pressure usually. So it calls like inventory getting long to too long.
So, but as we have studied that acceptance below P shape is little bit very difficult, then uh, let it be market. It can
See,
do what.
you have to look into the overall context. I'm not saying like the P-shape profile acceptance will be difficult. Even yes, it is difficult. Even last Friday also we haven't got any acceptance, right? So the P-shape profile is a short-term reference. This reference is going to be valid over here. If you could see the point of control is also still saying at the same P-shape profile only. So last Friday also we haven't seen any acceptance.
Sir.
If there are two scenarios we can think about that. One is like AB poor high rejection. Let's say price opens here, rejects. That is also a bearish opportunity. Or if the price action is straight away gonna start accepting, let's say the price opens here, goes up, and then very quickly it started coming down. That is also an opportunity towards open equal to low. Maybe sometimes it may be even temporary selling pressure. We don't know how long it could extend, but immediate resistance is over here,
Okay, sir.
right?
Thank you, sir.
Yes, there is also another P-shaped profile. You can see that there is one more P-shaped profile we had on 30th of April also. So it's kind of a strong one-time framing and it resulted in a P-shaped profile. Not a great stem, but all these stem are like kind of it formed because of the one-time framing only. Letter A, B, C, D, E, and yeah, up to E, it was one-time framing is there. Later on, the balance has been seen. So it is also one form of an P-shaped profile it is. So we have a back-to-back P-shaped profile. And in fact, we also have another temporary support zone is what we had on 30th of April. So maybe we should even think about a 295 as a potential target destination because this RP block is also one of the potential target level, as you know that. And moreover, two back-to-back open equal to low levels are there. That is also a sign of dangerous thing, particularly if it is happening near to the major swing high. You have to consider this as an potential threats. So 295 could be an interesting target in a very short term from a power grade point of view. So the first target could be like the first to open equal to low levels, because that is what it tells us, like inventory is getting long to too long. Second target should be around the RP POC kind of levels. Likewise, in Nifty also, we have similar levels. I'm sure you might be tracking those things. There is an AB power low is there. So if at all anything on the downside, the first immediate target is highly possible target is towards 22,350 level, provided if last Friday it started breaking down, very higher chances that we'll be seeing the AB power low in a very, very short term. It's a positional target. It's not an intraday target though. So maybe if at all the price is breaking down, maybe this coming weekly series, we can expect AB power low to get a clearance, provided that the context is turning negative. As of now, my view is totally neutral. So it mostly depends upon what the market is likely to do on Monday. So that is where we'll be taking a positional opinion. As of now, I don't have any positional opinion, but my positional opinion, I'll be framing most likely on Monday or Tuesday. I'll be definitely having some sort of positional opinion, whether to trade another 600 points on the higher side or to trade another 600 points on the downside. But at this point in time, if there is any weakness, yes, the weakness is there. The only hope is like the liquidation breakout failure. That's the only hope. So provided if the last Friday low is not getting broken, definitely that could be a very from an important aspect. That level could be seen as a very important reference level. But if the low takes out, then what we can see rest of the series is mostly bearishness, right? Because weakness is already everywhere across the time frame. All right, so
Sir, one more question, sir.
yeah, please.
मतलब means sir that for monthly multi-month breakout failure or multi-week breakout failure, do you need to wait for the closing of the week or month, or we can consider it on
For a
the
multi-week breakout failure, we have to wait for the week to close.
close? And another question.
Sometimes, if it is at the extreme bottom, you may have to wait for 1 or 2 days after the week end closes. Maybe you have to wait for 1 or 2 days to confirm whether the low is not getting disturbed or not.
And for means let's say that market is going upside,
Hmm.
and two times market is matlab market is in one time showing up, and if it is breaking and again two candles are green, that is option direction is positive, sir, then what we need to write it in top down analysis, sir? It is auction positive or one time showing or what?
Can you give some example, like which stock?
Like, sir,
So you're saying like market, can you repeat
Hero,
the
Hero Motoko, sir.
Hero Motocop? Okay, let me check. So you're talking about from a market profile perspective or from a top-down perspective?
Top down analysis perspective, sir.
Oh, they started showing call option and put option also. That's a very interesting thing. So a lot more things are going to happen with trading view then. Okay.
They are aggressive players, sir. No,
Yes. See, Hero Motocorp, NSE.
monthly chart, sir.
Yeah. So monthly chart, what we are watching here. So mostly it's a consolidation. That's what I'm seeing here. So it's been balancing on the uh, monthly. So there's no clear expectation over. So most likely we have to control our targets. We cannot go for a bigger targets because monthly is not trending. So maybe we'll go for weekly. Weekly, there has been like recently there's been an uptrend, right? So there's not much of a damage done yet. Maybe one can consider going for a positional shot down below 44.37. They have to reevaluate whether to take, because that is where the trend will start changing on the downside. And daily, nothing much. So still not much of a major damage yet. But now if you look into the profile, we have to later on look into the context, what is happening around that level. So is it an inventory getting long to too long or something like that? If it's happening, maybe we can consider even charting the markets also.
Thanks, sir.
Yeah. So there are a couple of more questions. So Sushant Raj is asking what is G2 and G3? So G2 and G3 are like kind of a price action techniques which are applied on top of the market profile. It's a pure price action techniques. So OS Kempawat is saying like few days ago, one of your reps tried to reach me via mobile, but due to some reasons outside my control, I could not attend the call. Now I'm reachable. Okay, anyways, I'll ask my team to connect with you back. So OS Kempawat is also asking, now TradingView has an indicator called TPO. I want to hear from you if you had used it. Yes, I had used it. But the problem is like at this point in time, we cannot use the micro TPO concepts. Structural level, macro structures, we can use it. But microstructures, as of now, we will not be able to use it because it is not supporting the micro TPO information, right? So otherwise, yeah, it's a good tool, but mostly for beginners. Advanced players, definitely they need microstructure, micro TPO support. That is, at this point in time, it is not available in TradingView also. It is not available in Go Charting also. All right, so let me pause here. I say thank you for coming by and attending the session. So see you on next week. So next week, usually this session is supposed to happen yesterday, but there was some glitch, so I had to postpone it to today. So next week onwards, every Saturday, 6:30 to 7:30. So we shifted to 6:30 because people are these days busy with IPL. So we thought like, okay, we'll try to finish off before IPL. So anyways, have a wonderful Sunday. Thank you.